We're live in Bangkok as 53 million voters prepare for this weekend's election in a test of whether Thailand can break the cycle of more than a decade of political instability. This is Inside with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian stocks paring losses following heavy selling in U.S. tech shares, while Bitcoin and silver stabilize. We speak to former Tech Mahindra CEO CP Gurnani as fears of disruption from more advanced AI models grip the software industry. And while the market sell-off deepens and volatility rises, we discuss investment strategy with Nipun Capital and ARK Invest. Also ahead, India's central bank expected to keep rates steady after the government pledged to boost spending and secured a trade deal with the US. Japan heads to the polls on Sunday, with surveys suggesting a comfortable win for Prime Minister Takaichi's ruling bloc. And as we look ahead to Thailand's elections, we assess the political climate with an expert from Mahidol University and look at business conditions with Hana Microelectronics. Markets just coming online as we look ahead to the general election on Sunday. This is, by the way, the third in 7 years. This latest vote comes amid multiple challenges to the economy, which is set to grow at its slowest pace in a decade. But our top story is the big moves in markets this week on new worries about high valuations across assets that had led the rally to this point. Asian stocks now paring earlier losses, with a tech-heavy Kospi clawing back an earlier decline, while silver and Bitcoin are steadying amid volatile trading. For more, let's bring in managing editor for Asia Equities, Lianting Tu in Singapore. Lianting, stability coming back, but the question is for how long?
Good morning, Haslinda. It does seem like sentiment drastically improved in the last hour or so. As we came into the morning today, we saw indiscriminate selling in Asia Tech after Wall Street's favorite trades got collapsed overnight. But we do see dip buyers really coming in right now. If you look at Korea, SK Hynix just turned green after losing more than 5%. And same goes for Samsung. I see foreign investors kept selling, but retail investors are big buyers today. And Taiwan, as you can see, the benchmark also just erased losses. We couldn't see real-time trading data for Taiwan, but I suspect the retail crowd would probably be the biggest buyers right now.
Lianting, are we seeing any repositioning at all? I mean, not too long ago, in fact, just days ago, people were talking about, how it is time to perhaps put your capital elsewhere.
Yeah, I think right now it's about a recalibration within this AI trade, right? In the last couple of days, we're looking at business models being interrupted and the software companies really got sold off. But people are really thinking about who are going to be the beneficiaries in this time around. And if you look at today's action, people are thinking, again, Korea and Taiwan's chip hardware makers are really well positioned. And if you look at Citi, the broker just upgraded Kospi to 7,000, and that's a level, of course, or probably takes a few months to get to with the momentum like we saw recently. And if you look at Taiwan, TSMC is still very much having bullish calls from everyone. So I would say it is about people sitting down and really thinking about going forward, who will be the group of AI trades that will continue to benefit from the big spending coming out of AI hyperscalers that we saw from these earnings season in the US so far.
At the same time, Lianting, they're also looking for havens, they're looking for shelter. We know that Goldman maintains a 6,000 level for gold, and now some are even saying gold could get to 7,000. So they are looking shelter elsewhere.
Yeah, the shelter right now, I was just thinking coming into work today, it is, there's nowhere to hide right now with the gold and silver and the volatility we saw in Asia's, I should say, global equities. I think U.S. Treasuries may be a little bit of a haven right now. I think people were, talking about JGB also being a very volatile asset class. So I think right now we need to see how the dust will settle down and see how people recalibrate, maybe going into some of the parts of the AI trade or maybe putting more money into the US Treasuries. But gold and silver, really, right now, I don't think they are acting as very much a haven right now with the volatility we saw recently.
We wait in anticipation. Lien Ting, thank you. Managing Editor for Asia Equities, Lien Ting, out of the Lion City. Now let's get more on the sell-off with Pooja Malik, founding partner and CIO of Nipun Capital, which manages about $2 billion in assets. Pooja, let's get your perspective on it. I mean, it was a 7-day sell-off amounting to a loss of $1 trillion. How are you assessing the movements we're seeing today? Dip buyers coming back in.
I think it's less about dip buyers. It's more about people differentiating between stocks that are more likely to get hit hard versus those that have staying power. So, for example, if you look at what happened in the EM context, global sentiment spilled over to EM. And that sentiment being negative means the first wave of reaction was a big sell-off. And that sell-off was indiscriminate across software, across hardware, etc. But now you're seeing Kospi, Samsung, SK Hynix stabilize because investors are realizing that the impact on hardware supply chains is different from the impact on software stocks. So more than dip buyers, Haslinda, you're trying to see investors trying to line up fundamentals and not just trade on sentiment.
So Pooja, is the AI, is the tech trade still intact then? I mean, is it just a matter of reassessing who the winners and losers are?
I think the AI trade is structural. But in the near term or even in the midterm, there are a couple of things to watch out for. One, of course, is valuations. So some stocks are priced like they're going to grow 100% for the next 5 years. That's just not going to happen, right? So watching out for valuations is important. The second thing in the tech trade is to differentiate between companies that AI is going to disrupt. And, it will disrupt many companies, many industries. And that will mean weaker margins, especially for lower value-added players. So if you think about Indian IT services, for example, that's one segment that's likely to get hit hard in terms of competition, margins, and some companies dying out. But in contrast, if you think about the Chinese hyperscalers, firms like Alibaba, cloud revenues are growing 35-40% year on year. Margins are growing. And companies like that, especially the Chinese hyperscalers, they have a direct-to-consumer business, which is sticky also. So they're less likely to get disrupted by the AI trade. And so I think the AI trade is structural, but what is different going forward is differentiating winners versus losers in hardware supply chain, and within software, companies that can sustain versus companies that are going to see margin pressures and possibly get wiped out completely.
Pooja, we saw retail investors buying the dip. Would you be a buyer? Have you been a buyer? What's looking attractive?
Yes, I think the Chinese stocks still look attractive. So Chinese equities were up 30% last year, which was a very strong number. But when you compare it to either Latin America or Korea, for example, was up almost 100% last year. Samsung was up 140%, SK Hynix was up 3x. So compared to a lot of those stocks and parts of the market, the Chinese companies still look more attractive to us. In terms of earnings, I think earnings are going strongly. Sorry, go ahead.
Go ahead, Pooja. In terms of earnings?
I was saying earnings are looking robust across EM, but especially in China too. And to wrap up that China comment, Chinese companies, both in AI and in semis, have very strong support from the government because the government is so focused on the self-sufficiency theme. That is why I think China looks attractive to us compared to Korea or other parts of EM.
How about about the Japanese market, Pooja? What are your thoughts on that? I mean, we're headed towards an election. It has been a very attractive market for a lot of investors.
Yeah, that's not a market that we are very heavily involved in. Yes, the election coming up, and I think the outcome looks pretty clear. At least the market thinks that it's going to be a clear outcome. In Japan, too, I think while there's been a very strong recovery over the last 3 to 4 years, the structural long-term demographic story is still weak. So we prefer to invest in other EM countries as opposed to Japan at this point.
What assumptions are you making about the Japanese yen?
The Japanese yen is definitely very attractive as a U.S. investor, right? And somebody that would travel to Japan for vacation. But I think at some point the authorities will step in to protect the yen. And in fact, that ties into the U.S. dollar. The U.S. dollar itself, I know it's had a short rebound the last couple of days, but the U.S. dollar is set to be structurally lower over the next 12 to 24 months. That also ties back to the conversation that you were having earlier about gold and gold being a safe haven asset. As the demand for gold has gone up, correspondingly, the buyers of the US dollar have gone down. And so I think the gold, while gold continues to rise, the US dollar is set for a little bit more of a decline this year and next.
And expectations are that the dollar will continue to weaken. By the same token, where do you see gold headed then? Because a weaker dollar could push gold even higher.
I agree. The weaker dollar is likely to push gold higher, especially because the buyers of gold are the sellers of dollar, or at least they are entities that might have bought the dollar under other situations. So the thing with gold is that actually the tradable supply of gold is quite small. And the increased demand for gold is coming from global central banks. Global central banks in other times would have bought US treasuries, but now because of political reasons, tariffs, trade, and uncertainty around US policy and US stance, that demand for US treasuries has gone down and is getting replaced by gold. When central banks buy, they're going to buy in large amounts, and the gold market is not really that deep, which is why you're seeing this big run up in gold. But as long as that demand for gold stays from central banks, I think gold is likely to stay on an upward trajectory.
Pooja, we heard from my colleague Alia Lenting saying that gold, silver, they're no longer a haven play. If you're looking for a safe haven, what would that be? I mean, we saw so much volatility. I mean, that $1 trillion rout is a case in point. Where do you seek shelter? What's looking safe? Because they say even treasuries are not looking safe right now.
Yes. Treasuries are also not looking safe. The best thing for investors, in my opinion, right now, is to maintain a very well-diversified portfolio. And that means have a reasonable allocation to equities, but also have commodities, not just gold, but a broader basket of commodities, and run a balanced portfolio across equities, fixed income, some commodities, some real assets, etc., because there is so much macro and geopolitical risk right now that any asset could be impacted at any time. And I think keeping a broadly, globally diversified portfolio is the best thing for investors at this point.
As we talk about U.S. assets, I'm just wondering if the election of Wash may provide some stability to American assets and reverse the sentiment that people have held about the U.S. So far.
The election, I think in some sense, irrespective of who the Fed chair was going to be or who would have been picked for that role, the path for interest rates in the US is clearly a path down. And that is, of course, very influenced by the current administration. So I think investors have that recognition at the back of their mind that interest rates are headed down, irrespective of who the Fed chair is going to be. I think the issue at heart is what happens to inflation and unemployment in the US. With the immigration policies being as tight as they are we going to see inflation rise in the US? Or are we going to see signs of weakening in terms of consumption and demand? The US economy held up very well last year. Is that going to continue to be the case? So I think it's those two things, inflation and unemployment, that I think the Fed is going to be watching out for.
Pooja, even as you talk about the need to have a diversified portfolio, is there one asset or asset class which is a must-have in 2025, given the current environment?
Equities are still well positioned. I think a global basket of equities is still likely to do well because we're still seeing earnings growth, whether it's in the US or in emerging markets. In emerging markets, companies are being supported by government policy. Many of the local governments in EM, be it China or India, launched a whole set of supportive policies last year in an attempt to ward off the economic impact of US tariffs. In addition to that, monetary policy in EM has been very supportive as well. So we're continuing to see solid earnings growth in markets like Korea, Taiwan, even China, as well as corporate earnings growth in the US has been reasonably strong as well. So given that outlook for earnings growth,
right,
I would think that equities are still set to have a strong year this year.
Pooja, thank you. Pooja Malik of Nippon Capital. Now, still to come on Inside, a jam-packed show. Japanese voters heading to the polls on Sunday as Prime Minister Sanjay Takaichi gambles that her strong approval ratings will translate into an increased lower house majority. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from Bangkok ahead of Sunday's general election. Now, Japanese voters are also heading to the polls on Sunday. The lower house election is a high-stakes gamble for Prime Minister Sanjay Takaichi as she seeks to shore up her coalition's majority in a vote set to have wide-ranging implications for markets as well as regional security.
国民の皆様、私は本日
Just 3 months into the job, Prime Minister Sanjay Takaichi dissolved Japan's lower house, calling a fresh vote for February 8th. Coming from a string of election setbacks for the ruling Liberal Democratic Party, Takaichi is aiming to capitalize on high public support and increase her majority in the more powerful lower house. Some recent polls show an approval rating of more than 60%.
I think Takaichi is really in an extremely enviable position. I mean, her support rates have been consistently extremely high, and I think that's going to do quite a lot for her in this election.
A stronger mandate would make it easier for Takaichi to push through her agenda, including higher defense spending and the largest supplemental budget since the pandemic. But the road to victory might not be straightforward. The LDP's alliance with Komeito fractured last year, ending a 26-year political partnership. The realignment injects new uncertainty into Japan's electoral dynamics. Voters, though, are more focused on the cost of living. Inflation has stayed above the Bank of Japan's 2% target for more than 3 years, while wages lag and a weak yen pushes up import cost, giving a sense of falling living standards. To ease the pressure, Takaichi pledged to suspend the 8% sales tax on food for 2 years.
Maybe it's because of the weather, but the price of vegetables, some are just shocking, aren't they? Even things like snacks and chocolate, their prices haven't doubled yet, but they've suddenly gone up quite a bit. Same with rice.
I wish they stopped just talking about tax cuts or eliminating the consumption tax during the election season and actually put realistic measures into practice.
The stakes are high. An increased majority would give Takaichi a green light to pursue what supporters call a more assertive Japan, with higher defense spending and state-led investment. But a loss of seats would be a self-inflicted wound for the new prime minister, who has said she would step down as party leader if that happens. Even before ballots are cast, markets are reacting. The yen has wavered and the government bond yields have risen, reflecting investor unease over Japan's fiscal path.
Since October of last year, we have taken a very responsible approach to public finance, talking about responsible, sustainable, and proactive fiscal policies. We are not talking about expansionary fiscal policies, and this is demonstrated by some of the numbers that we see. So I asked the market participants to calm down.
Japanese stocks have already outperformed many of their peers as investors focus on the so-called Takaichi trade. Ariel Buzetto, Bloomberg, Tokyo.
It is a consequential weekend for Japan, and Bloomberg opinion columnist Garrod Ridey thinks we should be ready for something he calls Takaichi derangement syndrome. He joins us now from Tokyo. Garrod, I take it that this is tongue-in-cheek. Put that in perspective for us.
Absolutely. It's a little play on words, play on a phrase that is used to describe President Trump, the Trump derangement syndrome. And just to be clear, I'm not trying to draw a connection between the two leaders. You know, Prime Minister Takaichi is very much a normal politician in the mold of many a Japanese politician, and obviously President Trump is a very different kind of character. But there are some similarities to be had between them, and one of them that I try to highlight in this column is the fact that they can really drive people a little bit crazy and end up with some sort of like overreactions to things that they are saying or doing. We've seen this already in the 3 months that Prime Minister Takaichi has been in power. We already had the flare-up with China, which was obviously a severe overreaction to comments that Prime Minister Takaichi made over Taiwan. We've seen that in the market. You had in the little section before I came on air, we were talking about the market's reaction to Takaichi, which in many cases has been a large overreaction and an assumption of massive spending that really isn't there, really isn't part of her plan, at least at the moment. So I'm trying to suggest to people to maybe read between the lines a little bit and to pay a little bit less attention to the rhetoric and a little bit more attention to what's actually going on.
Garrod, deranged or not, it does seem like she has the ability to do what Trump did, and that is to win big.
Absolutely. All of the polls are suggesting that she is indeed going to win bigly, shall we say, to bring up one from the first Trump administration. She certainly, it looks like the gamble that we've been talking about is certainly going to pay out in her favor, and it would take a severe surprise, I think, if she wasn't going to end up with a massively expanded mandate. And then that is also, as I say, that's going to drive some people crazy, because now she'll have a little bit of extra freedom to do some of the things that she wants to do.
What are polls saying? I mean, it does seem like she does have support from pretty much across the board.
Yeah, her popularity is really something that we very rarely see, I think, in Japan. I can only think, of the late Prime Minister Shinzo Abe and Junichiro Koizumi in the 2000s in terms of how popular they are. And one other feature is how incredibly popular she is amongst young people. Some of the polling has shown 80-90% support rate among under 30s. So she really has something. And we're going to see, how that turns into seats. All the polls show that she is really going to knock it out of the park on Sunday.
Garrod, thank you. Bloomberg opinion columnist Garrod Ridey there, coming to us from Tokyo. Now, still to come on Inside, Thailand also head to the polls this Sunday, but the election may just deliver more of the same for voters wary of political turmoil and stagnant growth. We'll get a preview with Mahidol University's Punchada, Sirivunnabood. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from Bangkok. And here's a quick look at where markets stand as mainland China heads to lunch and Japan comes back online. Equities and cryptocurrencies showing signs of stabilizing after an early slump in Asian trading. We're also keeping an eye on Thai assets as the country heads into its third election in 7 years this weekend. For more, let's bring in our Bangkok Bureau reporter, Papicha Tanakasampipat. Bas, tell us more about what's at stake in this election.
Haslinda, this election will bring in Thailand's fourth administration in just a little over 2 years, and it will be a key test whether Thailand can move beyond or break away from a cycle of political instability that has been in place since the last coup in 2014. It's essentially a two-way race between the two dominant forces in Thai politics right now, which is the conservative establishment that is determined to keep its power since that has been entrenched since the coup in 2014, and the progressive movement that won the last election in 2023 but was blocked from forming a government, was blocked from power. And the election is also going to be critical for the Thai economy, which has lagged behind Southeast Asian peers for much of the past decade, and investors will be watching for signs that Thailand can form a stable government with a strong enough mandate to govern, and any signs of prolonged uncertainty or contested transfer of power will likely reinforce fears of policy paralysis as well as hurt investor confidence.
Right. So, Bumjai Thai Party versus the People's Party, that is what we're looking at essentially. Who is likely to emerge on top? How clear might this outcome be?
That's totally right, Haslinda. It's essentially a two-way race to the top between those two parties, the ruling conservative Phumjai Thai Party of Prime Minister Anutin Charnvirakul and the progressive reformist People's Party that has been topping popularity polls for the past 2 years after the predecessor Move Forward Party was disbanded after winning the last election. Neither party, though, is likely to win an outright majority in the 500 contested seats in the House of Representatives, which means that this will most likely become that the election will result in a coalition government. But regardless of whoever finishes on top, the kingmaker will likely be the Pheu Thai Party of the influential Shinawat clan that you might remember produced 2 prime ministers after the last election, only for them to be both ousted from power by the Constitutional Court. If it's Phumjai Thai finishing on top, the path to power might be more straightforward, but if it's People's Party, a win is not enough. It will likely need a landslide victory.
Bas, what issues do voters care about? As we walk the streets of Bangkok, you get a sense that it's more about the economy, less about the politics.
In a way, that is correct. The economic issues are front and center on voters' minds, Haslinda, because Thailand has been grappling with high cost of living, high household debt, near stagnant wages, and also high income inequality. And voters will be also worried that Thailand is going to be left behind in one of the world's fastest growing regions because the Thai economic growth has lagged behind its peers for much of the past decades. But on the other hand, you might also notice that there is a nationalistic sentiment running through the country right now, and national security is also a big concern playing on voters' minds in this election after the Thai-Cambodian border clashes erupted in July and in December last year. But on the other hand, more reform-minded voters, younger demographic, will be thinking about change and calls for reforms, and they will be thinking about the role of the establishment and whether the establishment will allow People's Party to take power if it wins again this time.
I imagine they'll be talking about quality jobs as well. Best thank you, our Bangkok Bureau reporter, Pichai Tanaka Sampipat there for us. Well, our next guest's work spans the study of political parties, elections and governance in Thailand. Joining me here in Bangkok is Punchada Sirivunnabood, Dean of the Faculty of Social Sciences and Humanities at Mahidol University. Good to have you with us. We have been here many times before. This is the third election in 7 years. We had a rotating door with 3 prime ministers in 3 years. Put in perspective for us just how significant this election is, or is it not?
Well, it's actually very important for us because, a lot of people expect a lot of change in this election. And, if you can see from the last week, pre-date for the election, a large numbers of people went out for the pre-election days. So it means that they really want to have change and they want a better economic development. They want a better structure, economic structure, political structures of Thailand. So this time is really important.
They have been wanting change for the past 10 years, but even their votes have not translated to actual change and reforms. What would it take this time around? Who needs to win for that to happen?
Well, actually, if we want a structural change, the People's Party is the most progressive parties of Thailand supposed to win this election. And if you look at the polls, in every poll in Thailand, the Progressive Party or the People's Party, they won a large number of votes in the poll. So if we want change, we want the new structure. It has to be the People's Party. But in practice, in the reality, it seems that, even though the People's Party is going to win the elections, it's really difficult for them to form the coalition government after the election.
So realistically, can change come? I mean, we saw how the People's Party, which was then the Forward Party, actually won the number of votes, but they still failed to form a government. And hence, we are back to square one.
Yeah. So in Thailand, normally in general for the democratic country, most of the political party that win the largest numbers of votes, they're supposed to be the prime minister and form the coalition government. But in Thailand is another story. Since 2019, the second party that won the election have a chance to form the government and become the prime minister. So this is the same thing happen as well. And if the People's Party cannot really win the majority votes, which is 250 seats in the parliament, is really difficult for them to become the prime minister and form the government. And it seems that this time we have a high potential that the second runner-up of the party, which is going to be Thai, might be able to form the coalition government. They have a lot of partners, a lot of political parties want to join them.
The issue of nationalistic sentiment is also a key theme at this election, given the border dispute with Cambodia. Might that play into the hands of Kun Anutin?
A lot, especially, people who are in the older generations, baby boom, Generation X, they really care a lot about nationalism, what's going on at the border between Thailand and Cambodia, and also people in the northeastern part or Isan of Thailand, they really want their life back for they can have the daily life back, and they don't really want Thailand and Prime Minister Anutin to open the borders. So then that's why Thai use this term, nationalism, trying to boost their support around the country.
Of course, Anutin led the caretaker government. I'm just wondering, how well has he done? Has he proven himself to be a good prime minister that the people would vote him in yet again?
The thing is, he's really smart. He brings the best, CEO and technocrat in his team, the 3 persons, Ministries of Commerce, Ministry of Finance, and also Ministries of Foreign Affairs. This is the famous persons, candidates in Thailand, and they already proved that they were successful in their career. So these 3 people, they kind of help Anutin and support Thai a lot, that it will allow a lot of people, especially the elites and also the middle class in Bangkok, have more trust with the Thai party.
What's different this time around as well? Voters will be asked to vote on whether or not they want to change in the constitution. This has never been done before. And chances are people will vote for that change because this is a charter that was put in place back in 2017 by the government appointed by the military. If the Thai were to win, might they push through with a new constitution?
Well, I think, it's really difficult to have the amendment of the new constitution because, after we pass this referendum, which is going to be the same day as the election day, there's a lot of process to go through in the parliament. And of course, there's a senator that have to vote to support the amendment of the constitution as well. In the last November, we can see is that the senator did not really support to amend the constitution. And I think it's going to be difficult for the future if the People's Party want to amend the constitution, if the referendum passed this time, but it doesn't really mean that we're going to have the new constitution.
What does it mean if the current constitution remains intact? How far ahead, how much change can we expect from the country?
Not that much, because there's so many mechanisms, so many things that were put in the Constitution. For example, the role of the Senate in many things, and also the national strategy, all this kind of thing is still with us, and also the roles of the independent organization that doing check and balance between the government and also the parliament. It's going to be the same. So if we don't really have the amendment of the Constitution, it's a bit hard for the country to have the change of the structure, both economics and political terms.
And that will weigh on the economy. This is an economy which had so much hope. It was a tiger economy. Now the sick man of Southeast Asia. Mm-hmm. Can we realistically think Thailand's economy can improve from here?
We have to have a hope that one day, economy is going to be...
It's not a strategy, though. I mean, can we expect reforms, policies that would actually help Thailand grow in line with the rest of the region in Southeast Asia?
Well, I think it's possible. It just depends who's going to be the prime minister. Even though, Phumchai Thai won the coalition and can form the government, at least we have the, I think it's one of the two of the best minister from finance and also commerce that got a lot of trust from the people and they know what they are doing. Or even the People's Party win the election, they have the professional team that can also do the improvement of the economics of Thailand too. And I add a little bit that the People's Party, they have a list of policy that they're trying to change the economic structures of Thailand. So if they become the government, we have a hope to have the better economic status in Thailand.
Who is likely to be the prime minister?
Well, at this point, I think it's going to be Phumchai Thai because, if you have to collect and together all the political party to have more 250 seats, Phumchai Thai have more potential because he has a lot of friends and a lot of political party. I think they prefer to join Phumchai Thai better than People's Parties at this point. But, who knows? But I think it's going to be Phumchai Thai have more potential.
Do you think Thailand is at risk of really being left behind? It's been unable to attract the new age industries, for instance. AI investment is lacking, and of course the skills among the younger population is also, not up to scratch to what's needed within the industry. Is there a real risk that Thailand will be left behind in Southeast Asia,
yes,
a laggard in the region?
Yes, of course. If we still, have the same kind of system, same kind of structure, a lot of young generation, the best generation for AI or technology, they prefer to move outside Thailand, which I don't think this is a good thing for the economics of the country. So if we want to have this kind of smart people, we want to have this kind of growing of economic, I think it's a time for the country to have change.
Punchada, thank you so much for your time. Great assessment there, Punchada. Sirivunnabood of Mahidol University. More on the Thai election in just a moment. We'll get insights on what the Thai business community wants from the next government with Hana Microelectronics CEO Richard Han. Keep it here with us. This is Bloomberg.
When I think of Thailand, I think of a place where modernity exists alongside tradition. But behind that postcard image of a paradise is another reality. Instability, volatility, uncertainty.
And in recent years, economic lethargy.
There's not a lot of innovation in the economy. Thailand's GDP growth has been about 2% for a while now, while neighboring countries or peer economies are growing rapidly.
Foreign investors have taken note, or more specifically, they've taken their money.
Thailand looking to cut rates as growth falters.
No catalyst for a reversal of Thailand's fortunes.
That word, fortunes, isn't relatable to almost anyone outside Thailand's entrenched elite. According to the World Bank, Thailand has the highest level of income inequality among Asia-Pacific countries.
What's at stake is Thailand risks getting left behind in one of the world's fastest growing regions.
So we're asking, what went wrong? And can anything be done to turn things around?
You're watching Insight, coming to you live from Bangkok ahead of Sunday's election. Economic issues are front and center for some 53 million voters here. Our next guest runs one of the largest homegrown Thai semiconductor assembly companies. Hana Microelectronics serves sectors including automotive, industrial, and medical. The election outcome makes the company highly sensitive to labor costs, exchange rates, and regional stability. Let's bring in President and CEO Richard Han. Richard, good to have you with us. We haven't seen each other for decades now. You know, there's a lot of hope that the next government will reset the economy. How hopeful are you that might happen?
Well, I think we always need hope, but the reality may be something different. And clearly, the new government has a lot on its plate. And in your previous interviews, we all know how the Thai economy has underperformed relative to its Asian peers. And I think that's really the big issue that the next government needs to address, is how they can accelerate and improve the overall economic growth of the country.
The question is really who best to put Thailand's economy on a reset path. Currently, 60 political parties are vying for that spot, but we know it's down to Bumjai Thai or People's Party for the most part of it. I mean, who's well placed to do this job?
Well, the People's Party's manifesto looks very encouraging, but they perhaps lack the experience and never been in power. I think most political pundits think that it's going to be a coalition. And of course, one of the problems with the coalition is compromise. And when you have compromise, everyone's trying to please everyone else in order to go forward. But we don't have a strong policy, or that's ultimately what ends up typically when there's a coalition government.
How are you looking at the potential of that outcome, Richard? I mean, this is a country settled with 19% tariffs from the U.S. Essentially, it is on par with the rest of Southeast Asia. The problem is there is a great reliance on the U.S. market, and therein lies the issue for Thailand. I mean, what can the next government do to help allay those concerns and those additional costs?
Well, dealing with the US obviously is a separate issue, and every Asian country or every country has had to do that. As you point out, Thailand is in line with pretty much every other Asian country other than Singapore at around 19-20%. So we're pretty much pari passu on that basis. In our particular case, a lot of the parts that we produce for our customers are exempt. So it hasn't been a major issue for us. But for the country, I think they're pretty much even with everybody else. And as long as that stays that way, I think the country can manage. Actually, the actual trade agreement hasn't been finalized, as is, I believe, the case with many other Asian countries. So I don't think that's a major issue at this point in time. More of the bigger problems is how the government are going to support the development of new technologies, because one of the, every time there's an election, governments are promising populist policies, and one of the most obvious ones is we want to increase the minimum wage. And in dollar terms, because of the strength of the Thai baht versus the US dollar, we've had about a 22% increase in minimum wage over 2025. That is a lot for any company to absorb. And these are sort of the problems that the country faces, because essentially it's very much an export-driven economy. And tourism is, of course, an export as well. So when you have that kind of impact and cost increase, it's very difficult to grow.
What assumptions are you making about the inflows of FDI into the country, into the tech space? How confident are you that can be sustained?
The Board of Investment has done a tremendous job in attracting FDI. As you may know, its key policy, which was to offer tax incentives, has now been significantly blunted by the Global Minimum Tax Initiative, which is Thailand's party too. But they've done a fantastic job so far. But what I think they need is a lot more support from the government in order to compete with other countries in attracting FDI. And the focus on higher technologies is clear because those are the ones that can pay the higher wages. We can't keep increasing wages and do the same thing, because ultimately we will not be able to reinvest in the future and companies will not be profitable. We have to go up the value curve. And I think that is a big challenge for the country.
Of course, it is about AI. The rest of the world is investing a lot in ensuring that its people are on par in terms of skills for the AI world. How far back, how lagging is Thailand compared to the rest of Asia?
So, it goes back to education again. Fundamentally, if we don't have the right talent coming through, that's going to be a problem. That's the first thing. Secondly, we do have a lot of talent, but a lot of it leaves because there aren't the industries to attract them and keep them. And a lot of Thais go overseas, and many of them don't come back. They usually do come back, to look after their aging parents, but their productive years are behind them. So we need to invest in the industries which are growing, which will retain and attract the talent that the country has.
Richard, even as we talk about a sluggish economy, we talked earlier about how the Thai baht has remained strong, and that is impinging and causing hurt for exporters in Thailand. Is there a need for the likes of the Bank of Thailand to step in to stabilize the currency?
So there's a lot of discussion about why the Thai baht has been so strong. I mean, it's been the strongest currency versus US dollar, bar the ringgit, up until recently anyway. And, it's attributed to gold trading and many other issues. But if we just look at interest rates, definitely that is something the Bank of Thailand will be looking at. And there's a lot of debate about whether our interest rate is too high and whether there's pressure from the banking system to maintain that or not. Whatever they need to do, unless we have a more competitive currency, Thailand, which frankly relies on exports predominantly, is going to struggle.
Richard, thank you so much for your time today. Richard Han, President and CEO of Hana Microelectronics. Still ahead, an insight. We'll talk with ARK Invest's Dan White about the ructions in tech, AI and crypto as we get the RBI's rate decision. JPMorgan's Sanjay Mookim will be sharing his outlook on Indian markets. Plus, former tech Mahindra CEO CP Gurnani will be reacting to the software sell-off. More to come in our next hour of insight. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from the Thai capital, Bangkok. Let's get to our top story. Equities and cryptocurrencies regaining some stability after early losses in Asian trading, but sentiment is still weak following steep declines in U.S. tech stocks. For more, our Asia tech correspondent Annabelle Drulis joins us. Belle, a lot of the selling pressure was linked to Amazon numbers earlier and has a lot to do with a $200 billion spending plan.
Exactly. That's really the key reason and what investors were really focused in on, because $200 billion is a very significant capex plan for this year. It's way above what Amazon spent in 2025, which was $130 billion. It's also far ahead of what analysts had been expecting for the coming 12 months, which was $150 billion. So the capex is that really big concern, because it's really the woes that we've seen across tech stocks this week. Is that amount of spending justified for these companies? Because we We saw also the likes of Microsoft, for instance, being punished by investors for similar sorts of reasons around its latest results as well. But essentially, we got more commentary on this from the CEO, Andy Jassy, who was talking about where this money would go, which is, no surprises, predominantly to the AWS unit. We are seeing better numbers there as well because revenue rose 24% in the latest period. That's the biggest quarterly growth, which was $35.6 billion going back 3 years as well for the company. And as well, we saw some pretty strong figures for the e-commerce division. Okay, maybe it's being called maybe the bread of the business, not necessarily the butter of the business, which is still the AI side, but the bread alone, the e-commerce side does continue to generate most revenue for Amazon, and some strong numbers there, strong holiday quarter as well, but again, not enough to offset these fears around the CapEx plans for this year.
And Bell, Anthropic making the headlines again. We know that we held Anthropic responsible for the tech sell-off. There are now new updates to the foundation model. Is that making people even more nervous about it?
Yeah, yes, it is essentially in a nutshell, but nervous in different types of ways. It's sort of need to clarify here, I guess, the technology, because what we saw earlier from Anthropic this week and late last month as well was updates to Claude Cowork. Claude Cowork is sort of an AI agent, essentially. Overnight, we also had a new release of Claude Opus, which is its foundation model, and we got a new release there to 4.6. And this is one that the company is saying actually has capabilities that are specifically built for the financial sector. So it can do things like carry out research, other work-related functions. The company is saying it can analyze company data, regulatory filings, other market information, come up with detailed financial analyses that would normally take a person, a day, hours longer to put together. So that's the latest update, and you saw that market reaction there in these financial services companies, but it does point to that bigger concern we're seeing here, which is that AI has the capability to disrupt entire business models and ones that have been in place for a long time.
And Belle, before we let you go, the cryptocurrency space, Bitcoin looking for a floor, came close to 60,000. What's happening there?
Yeah, this has been a really interesting morning for crypto prices. So as we entered into the early part of the Asian trading session, we were tracking back down quite close to the 60,000 mark. We've since recovered off that to an extent. So we're trading around $64,000, $65,000. It is, very fragile. You can say there's probably thin liquidity in the market as well. So people are really getting bruised in this sort of environment, particularly when you look at the trading activity of crypto just over the last few months. I mean, it was not even a year ago we were seeing prices around that 125,000 mark. So it's a huge drawdown from there. And it's Bitcoin hoarders as well that are really feeling the pinch out of this, because the most interesting earnings we had was Michael Saylor's Strategy Inc. Just a few hours ago, but essentially confirming a net loss of more than $12 billion for the company in the latest quarter. So we did see that stock under pressure in late trade. Really big question of where we go from here. A lot of the traders that we're talking to are saying if we go back down to that 60,000 mark, if we hold it, it's probably a positive. But of course, you're also setting up for further losses.
Val, thank you so much for that. Annabelle Drew is our Asia Tech correspondent. Well, our next guest is with ARK Investment Management, a U.S. firm that oversees several actively managed ETFs, as well as the ARK Venture Fund, a closed-end interval fund investing in both public and private companies. Joining us now is Associate Portfolio Manager Dan White. Dan, let's start off with your thoughts on cryptocurrencies. Bitcoin did come close to 60,000. That is pretty much a psychological level. How do you see Bitcoin behaving from here?
Yeah, and thank you for having me on the program, especially at such an important time in the market where we're seeing a bit of panic in the crypto markets and in software and tech side of things as well, and particularly with Bitcoin. I think the quantum sort of fear, uncertainty, and doubt, and FUD as it's typically called, has sort of crept into the market. And since that October 10th liquidation event, it's kind of continued through, and there hasn't been any steady ground looking at quantum and how Bitcoin's going to fix it. But ARC's research and what we've done is take a hard look at quantum from a first principles ground up point of view. And Kathy Wood, our CEO, founder, and CIO, has asked ARC's research team to take an aggressive look at this and see what it could be. And even in our most aggressive modeling, we don't see quantum hitting a realistic point to disrupt the Bitcoin network within the next decade, and certainly past 10 years. And so in moments like this where there's such a strong...
So what are you essentially saying, Dan? Do you buy? Do you buy the dip? I mean, what do you do?
Well, since our trades are public, you've seen us average into our crypto positions over the last few days in different plays, both through Bitcoin and then just different exchange businesses and digital wallet businesses that often have Bitcoin exposure on their balance sheet. And in moments like these last few days, extreme capitulation moments, they often offer strong support and forming of bottoms in the markets. And so it's important for investors to manage through this volatility, buying into down markets in dips and, profit taking on the way up.
So what do you think would be the catalyst for Bitcoin to reverse and start climbing again? I mean, we do have really optimistic people who think that Bitcoin is going to get to 1 million.
Yeah, and certainly ARC has a very bullish stance points on Bitcoin. We have a history, approach to looking at this for many cycles now and experience through these. I think some of the catalysts that you can see in this next coming year are both from the regulatory front and banking front, as this administration is hyper-focused on digital assets and making the United States a center point for innovation, especially in the digital innovation world. And then on the banking side, as more products begin and everyday investors who might have had more difficulty accessing Bitcoin in the past have easier means to build holdings, access digital wallets, even borrow against crypto and digital wallets, digital assets, is growing in the landscape. And so I think a lot of that, as just more investors come into the market, will help dampen some of the volatility and open to upside.
Dan, look into the crystal ball for us. Where would Bitcoin end 2026?
So in ARC's point of view, we try not to look at the 1 year situation here. We really take a full 5 year, focus point here, or even longer. And that's part of our strategic advantage in the market against other active managers who are very short-term focused, quarter to quarter. We want to zoom out. And that allows us to kind of have a level head through some of this volatility by looking at that 5 year forecast. And our expectation for crypto is a significant upside into the 20s of trillions of dollars with TAM there, with Bitcoin capturing the vast majority of that.
Oh, Dan, I expected you to play along. Let's zoom out a little bit and take a look at the tech space. I'm just wondering, what's your take on that massive sell-off and then the recovery where retail investors are buying the dip?
Yeah, it's been an interesting week. And I think what this week is really, illuminating is that the market participants are starting to wake up to the disruptive potential of AI. And it's creating a lot of confusion out there, which is a great opportunity for active managers like ARC. On one side of things, you have, and in just the segment before, it was talking about Anthropic, these leading model providers showcasing the capabilities of their models, that's striking fear of a software apocalypse. And then on the infrastructure side, hyperscalers increasing their guides for capital spending over the next year. And when we kind of step back and you look into ARC's Big Ideas 2026, we detail a lot of this stuff in our forecast for these expectations. So on the data center side, you saw, in our research team saw about $500 billion in CapEx spend in 2025, which is a 2.5-fold increase from the pre-ChatGPT trend. And we expect that to scale over the next business cycle to $1.4 trillion. And what that does is that lays the groundwork and the infrastructure for these AI models to, have the compute required to generate the productivity boom that we think is coming, catalyzed by AI, and that will create a step function increase in real GDP growth.
So the AI theme stays intact. How about sescopolypse? I mean, do you expect the, software companies to be decimated, or might they just reinvent themselves? Perhaps, put AI into their own processes?
Yeah, we certainly don't think software is disappearing. In fact, there's probably an underutilization of software globally in the world, but there may be a shift of where the value, accrues to in this tech stack. And we think a lot of it is going to accrue to the platform and infrastructure side. So you can see the likes of Palantir reporting last week. They're growing their top line on their U.S. commercial side, where they're, showcasing the talent and the capability of AI in the enterprise. That line's growing at 130% year over year, and ARC itself is looking at companies like this and using Palantir to try to put it in our own business. We do so much research on these names. A lot of businesses are going to be left in the dust if they don't adopt AI, so we want to make sure we're ahead of that as well.
We've been talking about bubble in the AI space, stretch valuations. Is there still value to be had when you take a look at the ecosystem, the AI ecosystem? What's still undervalued? What's worth picking up?
Certainly, names like the Palantir, names that are building AI applications for enterprises to use and increase their productivity. And in their earnings, reports and guides and presentations, they offer a lot of these productivity boosts. Just like in the most recent one with U.S. naval ships scheduling, that's going down from 160 hours to about 10 minutes. That's incredible what the productivity boost can be there. And then we also see it on the infrastructure side of just building out the necessity to have compute to fuel these models. And the way that we're modeling is important because you mentioned the valuations, and part of ARC's underlying assumption when we're doing our bottom-up work is we anticipate a multiple compression. That's sort of injecting a conservative headwind into our modeling, where we need to see business acceleration and margin expansion help to overcome that kind of headwind.
Dan, I've yet to hear you mention that it is worth picking up Chinese AI plays. I mean, don't forget the DeepSeek moment. Would you be a buyer of Chinese AI plays? What might that be? What the risks are like too?
Yeah, absolutely. If you look across our product suite, you mentioned the ETFs at the beginning. We have our flagship one, ARKK, ARKW, ARKQ. These are next generation internet, robotics and autonomous technologies, and then the venture fund as well. We have positions there in some of the Chinese tech names, like an Alibaba, like a Baidu, that are cloud providers, and then on the Baidu side, also building out autonomous robotaxis. So we do have positions. We've been a little more picky and choosy there, but I don't think anyone should underestimate China. We heard it on Elon's most recent earnings calls. They are fierce, and they are competing in this AI and robotics space above most other countries. And it's certainly on ARC's end, and we've looked into a lot of these, and that's why we do have a few investments.
They are fierce indeed, Dan. Thank you so much for your time. Dan White, Associate Portfolio Manager at ARC Invest. Still ahead on Insight, more on the elections this weekend in Japan, and of course here in Thailand. Investors are betting on a big win for Japanese Prime Minister Sanjay Takaichi, but the path to power in Bangkok is less clear. We'll have analysis on the challenges facing both countries. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from Bangkok ahead of Sunday's general election. Now, it's the third election in Thailand in 7 years and comes as the Thai economy looks set to grow at the slowest pace in a decade. For more, let's bring in our Bangkok bureau reporter, Papicha Tanakasampipat. Thank you so much for joining us.
Thank you for having me.
I mean, it's been a lot of instability. Some say the last 20 years. This is a good chance for, the country to reset, but it's not going to be that easy. it's not straightforward.
It's not so straightforward because Thai politics is dominated by, two clashing forces, and it's been like that for the past 20 years. In the beginning, you can trace it back to the coup in 2006 that toppled the administration of former Prime Minister Thaksin Shinawatra, who was wildly popular, but whose popularity was a threat to the conservative establishment, which has since then been trying to preserve its power through, military coups or judicial interventions. And since the coup in 2006, we've had another one in 2014 against Thaksin's sister, Yingluck Shinawatra. And since then, we've had military rulings that ousted several prime ministers in the past 20 years. So it's going to be a key test whether Thailand can move beyond that cycle of instability and have a government with a strong enough mandate to last 4 years.
Is there a real chance of that happening? What would it take, and which party would it take?
The two top parties right now that are vying for top spot are from very different political ideologies. We have the ruling Punchada Party, which is now the leading conservative party for the establishment and is backed by the establishment. It's quite evident that it has a full backing because Prime Minister Anutin also has been aligned very closely with the military since the border clashes between Thailand and Cambodia in July, and in December he's been waking up nationalistic sentiments, and that's how the conservative voters are rallying behind him. On the other hand, the Progressive People's Party, which is a reincarnation of Move Forward that won the 2023 election but was blocked from power, has also been topping popularity polls for the last 2 years, but it's the battles that they each are facing are very different. For Punchada, if they come out on top, it's going to be a pretty straightforward path to power because conservative parties are going to rally behind Anutin, and it will help him easily form a majority government with a coalition of conservative parties. But for People's Party, the path to power is less direct. It will probably need more than 200 seats of in parliament or a landslide win in order to have a clearer path to power, and this is because it lacks natural allies in the political space right now, and also any potential allies would have to weigh the cost of upsetting the establishment and political backlash from helping move People's Party.
This election is also different because voters will be voting for whether or not they want to change in the Constitution, and that includes whether or not Senate plays a part in selecting the next Prime Minister.
The election is happening at the same time as a national referendum. You're correct, but this election will also, while this election will be a test for how much political appetite there is for change, a national referendum, on the other hand, will determine how if long-form change can happen at all. The question on the third ballot that the people will be casting on Sunday would be whether Thailand should have a new constitution that would replace the 2017 constitution that was written by the military-backed committee after the 2014 coup. And many critics and pro-democracy activists have said that this constitution has laid the groundwork to weaken political parties, weaken the political system, and made it easy for unelected constitutions like the Constitutional Court, the Anti-Corruption Commission to check the power of elected politicians and dissolve political parties. The path to power for the prime ministerial selection, though, this time the Senate will not play a part. So that would likely help the Progressive Party a little if it can clear if it wins an outright majority or wins a landslide.
Bess, thank you so much for that. We keep a lookout for the results on Sunday. Our Bangkok Bureau reporter Papicha Tanaka Sempipat there. Well, it's not just Thailand heading to the polls this Sunday. Japan is holding a lower house vote that could reshape the nation's political balance. Let's go to Tokyo, and our economy and government reporter Yoshiaki Nohara. It's high-stakes elections in Japan as well. Yoshiaki.
Yes, and this is, it's a big election, and it's the first one that Japanese Prime Minister Sanjay Takaichi is seeking approval for her administration, which just started 3 months ago. And she's asking, support and mandate for her, the kind of policy she wants to pursue, which is to, considered as Japan is becoming more assertive on the economic front and also defense front.
Yoshiaki, I'm just wondering, how is the support base for Takaichi?
Yeah, polls are showing, she's likely to have a decisive victory, which is going to be very key if she wants to pursue her policy agendas. But I would say that there's also uncertainty and risk factor to that scenario too, because of the change in the party dynamics here. The Takaichi's LDP just ended its long-time coalition with a party called Komeito, and now the Komeito has formed another party with the largest opposition party. So if the Komeito switches votes entirely to the other side, that can be a risk factor for Takaichi.
Yoshiaki, thank you so much for that. Bloomberg's Yoshiaki Nohara. Coming up, we'll break the RBI rate decision for you with a potential cut on the cards as inflation stays low and a U.S. trade deal lifts the rupee. Plus, we check in on Indian markets with JPMorgan following what they're calling a pragmatic budget from the Modi government. The head of equity research, Sanjay Mookim, will be sharing his sector picks. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from Bangkok. We're keeping an eye on Indian assets as we await the RBI rate decision. For more on what's at stake, let's bring in Bloomberg's Manaka Doshi in Mumbai. Manaka, it does seem like the coast is clear for a cut.
Well, Has, I lost the second half of your question because we're having some audio trouble, it seems. But of course, we're waiting to see if the Reserve Bank of India will cut rates. The consensus is that there will be no rate cut, though there are exceptions. Economists expecting a 25 basis cut and possibly the last one of this rate cutting cycle. So that's the first thing we'll be watching for. We'll also be watching for two other key measures: what the RBI says about liquidity in the market right now and what the governor says about transmission. That has been the stickiest thing for this central bank to achieve over the course of the last 1 year, though we've seen over 125 basis point cuts since this rate cutting cycle began. Very little of it has passed on to the government bond market. Yields there continue to be at about 6.6% or so, and that is not good news for the very aggressive borrowing calendar that we're going to see come up for the government of India over the next fiscal year, almost in the region, or actually more than 17 trillion rupees. So these are the key things we're watching for from this policy announcement. Well, Has, with that, I'm going to move it on to our guest, Sanjay Mookim. He is head of India Equity Research at JPMorgan. Sanjay, good morning. Thank you very much for joining us. We should have that rate announcement any moment now. What are you expecting? Are you expecting a rate cut or consensus? Nothing.
We lean towards a pause. But like you said in your opening remarks, even if one were to happen, it's probably the end of the rate cutting cycle for now. From our perspective, we think RBI's actions on maintaining a surplus liquidity situation in the market is probably more important to figure out, how you get that transmission again, like you said. But we don't think even if they do a rate cut now that you have another one left in the kitty. But liquidity measures, and I'd make a point that, look, if the pressure on the currency were to abate, and that is where perhaps the trade deal might be conducive. If the pressure on the rupee were to abate, then the ability of the RBI to drive liquidity surpluses actually improves materially. Yeah. So there is reason to be hopeful, but we'll see how the. In fact,
that was the next question I wanted to ask you, saying that given the announcement of the US-India trade deal, and though the details are still pending, broadly that's been beneficial for the rupee in terms of strengthening. We're at about 90 levels now. Do you expect transmission to get easier for the central bank from here on, and to what extent?
Well, again, as I've said in my internal communications as well, that what the US deal does so far is to help improve the confidence.
Sanjay, I'll interrupt you for just a second. We just have news coming in. The central bank has held the repo rate or the key rate at 5.25%, so the consensus has prevailed. Sure, please go on. Let's talk about transmission.
Yes. So look, our expectation is that there was a bit of a negative circularity in the currency markets as well. There was an inbuilt expectation that the rupee might continue to depreciate and people were acting accordingly. So once you've got the trade deal, while it may not necessarily change my GDP growth outlook in the next 12 months, it may not necessarily change my earnings estimates from the, let's say, equity market as well, but it is a booster of confidence, and therefore in the near term, it might be easier on the currency pressures that we've seen with the central bank grappling with, right? If you ask me the next question and look, I think flows will come back to India? I have a mixed view there as well. But yes, if the pressure on the rupee were easier, then driving liquidity in India, that becomes that much more convenient for the RBI.
It shows confidence, Sanjay. I'm just wondering whether it's also keeping its powder dry just in case.
Yes, and I think that is advisable as well, Haslinda. Look, if you think about the external environment, there's a lot of uncertainty whether the global growth will sustain at its robust momentum today, what kind of volatility you might see, what kind of geopolitical surprises might pop up in the next few quarters. We don't know. So both fiscally and from a monetary policy, it is perhaps advisable to keep some bullets in check, right? Not stimulate right now, but defend an ability to stimulate if something were to go wrong, let's say in the next few quarters.
How are you positioning on the back of the confidence you're seeing right now? Because we have a trade deal which has been in the making for the last 6 months. We've been waiting for that, and it finally happened, that agreement, first phase or not. And now we have an RBI that's pretty confident too. Does that shape in any way the way you mobilize your capital?
Well, look, I'd say that India has decent growth outlooks, whether it is in a real term, the nominal GDP 9 to 10% is also fairly decent. From an equity market point of view, I think earnings for the next 12 months should be of the order of 12 to 13%. It's a respectable growth. The challenge we're facing at the moment is that we're competing for attention with far more exciting opportunities perhaps in North Asia. The tech cycle is very robust. The memory cycle is on an upswing at the moment. So it is logical that a fund manager globally finds better use of his time outside of India at the moment, right? But India in itself, in an absolute basis, is now trading at much better relative valuations. I mean, I have now the Indian PE premium to EM has actually come off quite a bit. There are markets now which are trading higher headline PEs to India in North Asia at the moment. So interestingly, India is at a situation where the index is now looking relatively fairly valued. We have about 10 to 12% earnings growth. So I keep arguing that, look, for an individual based in India, the equity market is still a better return, especially on a post-tax basis. It's just not that high growth that we had seen for the 2 years post-COVID. So if you get your expectations right, if you're comfortable with the, let's say, 12% CAGR for the 13% CAGR for the next 3 years, then equity still makes sense.
So you're suggesting that the outflows we've seen, through the course of last year at a record, almost $18-19 billion. This year, we're already $3 billion in outflows. That will persist as a trend through the year?
Well, it's very difficult to call a turn in flows in a very short term.
Sure.
But like I said, if it's a relative trade and I can see better opportunity, better dollar returns in other markets, it will be difficult for India to pull flows in at the moment. Now, it's a known unknown. We don't know when the AI sentiment will turn. Is it now? Is the tech, excitement already abating, or will it rebound? These things are extremely difficult to anticipate. But I would argue that getting FPI flow in at the moment still requires a lot more effort.
All right. You made a reference to, other markets looking more exciting, other opportunities looking more exciting. One of the events this week, and what a mad week it's been, right? We've had the budget, the India-US trade deal. We've had the software sell-off that's hurt India as well, and then today's monetary policy. That software sell-off, Sanjay, I'd like your comments on. How much of a drag is that going to be, not just on the benchmark indices, but across the board? Last year, IT was, I think, the biggest drag on the Nifty 50. Do you expect that will continue through the year as we see more news flow around AI?
So it's a very complicated situation, Menka, because it is a very real threat, not just to the IT space, but to overall economic activity as well, because IT is a major part of job creation in India, especially for young graduates. There are many roll-on effects or knock-on effects to the economy as well. So if you see IT under pressure or IT job or net numbers start to reduce, then you would worry not just about the IT sector, but perhaps for real estate, for consumption in general, and Indian economic growth as well. Right? And this is a question that we cannot answer today, because we know it's a scenario that can play out. As of now, it's not played out yet. So if we look at, let's say, ancillary data points, which is the rentals for commercial property or the utilization of REITs, for example, or the net hiring in the services sector, it still looks to be fairly decent and positive, right? Now, IT companies may not be hiring, but the GCCs are still hiring. So as a service sector, we're still okay. Is this a threat? The answer is yes. Can I dismiss it? No. So it's until it gets resolved through evidence over the next 2 to 3 years, I think it will remain a constant worry for people looking at the IT sector in India.
Sanjay, people talk about how software companies will not be decimated. In fact, they will instill AI in their processes right now. What's the outlook for Indian AI companies? At what stage would you be a buyer?
The last bit is very difficult to answer, Haslinda. I think we'll have to see how the situation evolves. But the way I see Indian IT companies adapting to AI is to try to become implementers of AI projects, right? And this is how IT companies have historically, worked around disruptions in the service industry. Whether it was the role of cloud computing or digitization, etc., they ended up as net beneficiaries because they got a lot of implementation projects. Is that the way AI implementation will roll out as well? Will Indian companies on net get more work on global demand for AI implementation? We don't know. We'll figure out. There is a scenario, Haslinda, where actually you don't need that much manpower to implement many of these projects. So I don't think that there is a price at which we can start advocating IT companies, but we will need to monitor these developments. And if I can make a case that the business is secured for the next 3-5 years, then I get a little bit more confident about the IT outlook.
Sanjay, I want to talk about the budget as well. In our conversation with the government, they did talk about how they're expecting the trade deal between the US and India to boost growth. I mean, given that projection, how best to play this as an investor?
Well, it is very positive. And look, in combination with the India-EU FTA, if I were, let's say, a textile manufacturing company in India, I now have significant advantage in exporting globally. Whereas historically, Indian tariffs were hurting our exports. Now our tariffs are lower than peers in South Asia and Southeast Asia as well. So if for a period of the next 3 to 5 years, if the tariffs stay as they are globally, then Indian smaller industries such as textiles, footwear, the labor-intensive exporting, let's say, auto anchs, should be able to gain market share in an export environment, right? And so if you're looking for businesses where there is a material EPS impact, where there is growth outlook which has changed on the back of the deals, the EU deal and the US deal, then you'll have to go really small and mid-cap manufacturing sector sort of stocks. But the problem, Haslinda, is if I then look at the Nifty 50 and the large cap, banks, IT, consumer, the deals nor the budget has any implication for my 12-month forward EPS, right? And if we were projecting 12% before or last week, we still be projecting 12% now. So from a large cap investment perspective, like I said, it boosts confidence in a 3-5 year economic outlook, but doesn't change my EPS for the near term. Whereas if you want to play the trade deals, you have to go really mid and small caps in terms of picking stocks.
Yeah, fair enough. I have a two-part last question, at least on my end, Sanjay, and that is one, there are sectors outside of IT that do look interesting. So much news flow in banking, both in terms of new investments, but policy changes. Auto has been a shining sector, at least in the last year or so. What looks most appetizing to you? That's one. And the second one is a slightly longer term one, which is that Do you see big shifts or big challenges to the competitiveness of Indian industry and its profitability? Because we have opened ourselves up to trade quite significantly in just the past few months, right? We have the UK deal, the EU deal. Hopefully we'll get details on the US deal. And then, of course, the smaller ones, New Zealand, Oman. So the medium-term outlook on how you see businesses sort of faring in this open trade environment?
That's a very interesting question. But let me answer the easy part first.
Yeah.
What looks interesting now? So the two segments of the economy where we see business momentum improving, right, and which is where I think companies could therefore surprise, would be financials, where with a supportive regulator, at least the regulator intends to drive credit growth and liquidity in the system, financials outcomes should improve. We've written research arguing that the large banks in India should be able to deliver 13 to 14% EPS CAGR for the next 3 years.
Right.
And given the multiples, that's a great trade-off for me. I'd really continue to like the financials. The other segment where I think operations or business momentum is improving is the consumer pack. Now the challenge with autos is something that you've talked about, but we think consumption in itself is finding its feet. Urban consumption, discretionary consumption is starting to look better. The challenge here is that companies are facing intense competition. So even though the consumer is feeling better because inflation is down, because the GST was cut, taxes were cut, and there is an improved disposable income outcome, but you will not see this translate to bottom line for every consumer company because the competitive intensity
already the trend.
That's right.
Yeah,
so we have to have a combination of the top-down view that the consumption sector is looking better and a bottom-up view of figuring out, okay, which company has fewer competitive issues, which company is able to maintain its margins better, and then bottom-up pick the ones, and you end up largely with the autos for now at the moment.
Right.
The second part of your question.
Yes, Sanjay, thank you so much for that.
The second part of your question. Sure.
Go ahead, Sanjay.
Yeah, the second part of your question, Menka. I think, look, India has opened up, but the challenge that foreign companies might face in India when selling stuff in India is that the kind of product that Indians consume because of the reduced per capita income is not necessarily the kind of product that is manufactured in these developed economies, apart from, let's say, commodity staples, food, dairy and stuff. But the kind of cars sold in or manufactured in a developed economy are not the cars that we will buy here. So they will have to adapt products to local taste. And that takes a while. And that takes decision making, right? Do you want to create capacity to cater to an Indian requirement or an Indian taste, especially if you want to gain volumes? If you want to just sell what you are currently manufacturing, you have a small clientele in India. Right. So am I worried that a lot of my auto sales will be disrupted because European cars will come to India?
Not at these price points.
Because those cars have a small footprint of demand in the Indian market. But are they able to design products which Indians will buy? We'll see.
All right, Sanjay. Thanks very much. Has, back to you.
That's right. Sanjay Mookim, head of India Equity Research at JPMorgan, of course, joining us from Mumbai, along with Manika Doshi. Just to recap the RBI lines, the RBI kept rates unchanged. Expectations were that it would cut 25 basis points, perhaps a reflection of its confidence. Perhaps it is keeping its powder dry. The RBI also raising its GDP forecast for Q1, revised up to 6.9%, and Q2 revised to 7%. It says its financial year 26 inflation projection stands at 2.1%. And also coming out of the RBI, global trade remains robust despite uncertainties. The trade deal with the EU as well as the US will continue to support exports. Again, the RBI currently standing pat. Coming up, we speak to former Tech Mahindra CEO CP Gurnani as fears of disruption from more advanced AI models rattle India's software and IT services industries. Keep it here with us. This is Bloomberg.
We certainly don't think software is disappearing. In fact, there's probably an underutilization of software globally in the world, but there may be a shift of where the value accrues to in this tech stack. And we think a lot of it is going to accrue to the platform and infrastructure side.
And that was ARK Invest Dan White speaking to us earlier. Now, Indian tech stocks have been under pressure this week amid the broader global sell-off, driven pretty much by growing worries about how AI may disrupt businesses. PL Capital in Mumbai says it's staying cautious on near-term expectations for Indian software stocks, given the group's role as a critical software services hub for US companies. Let's get perspective from CP Gurnani, co-founder of AI on OS, and also a former CEO of Tech Mahindra. CP, good to have you with us. We've heard from some investors and founders that AI could eat software companies up because they could eventually automate what software companies have been doing for decades. Do you see that happening?
Haslinda, half-truth, half to be discovered. The reason I consider half-truth is because some of the routine jobs would be done by AI. And the reality is that as an individual consumer, all the LLMs, whether it's ChatGPT or whether it is any other equivalent LLM, all of us started using LLMs in our research, in our responses, in our automating some of the work that we do. Enterprise was a little slow to adopt. Now with the Anthropic announcements, we believe that enterprise will start adopting AI in a little better way. So there will be a shift, but will that shift happen in 1 year or 2 years? I think we have to take into account that there is a lot of regulator pressure also on the enterprises. In India, we have this act called DPDP Act, which is really about data protection. And these acts clearly need to be adopted to the latest wave of automation. But if you go back and look at the budgets that have been allocated to AI or IT, there is a growth there. There is a growth in AI budget, there is a growth in IT budgets. So yes, some of the SaaS companies will be under pressure, but my belief is either the infrastructure companies, data center companies, and the Indian IT companies will actually benefit.
At some point, AI might just still be an existential threat to software companies, no? I mean, it is advancing so rapidly.
I'm not denying it. I'm also saying is that there are new applications being created. So let's take a simple example. Today, you have a host of structured data and a host of unstructured data. It takes an army to manage data now or migrate from one platform to another. Number 3 is to harmonize across various data sources. Now, my belief is some of this work will get automated, but where you will need a lot more compliances is on data security. So, or creating new platforms or growth for new sales engines. So while you lose some, you will gain a lot.
CP, is there a chance that we might see software companies and AI companies in partnerships, or might they be competing against each other even more in the future?
As long as there is a growth market, I mean, I created or I've become a AI native company called Ionos, as you said in the introduction. And personally, I think there is a potential for serious partnerships. There is a potential for AI native companies like ours to deploy new and newer data flow solutions, agentic AI solutions. And I personally believe a company like Tech Mahindra will also spend a lot of time. As you would see, India selected about 8 LLMs as a part of the India AI mission. And one of them is from Tech Mahindra.
CP, just in about 20 seconds, I mean, how should a software company position itself? What should be its priority to remain relevant in an AI future landscape?
I can only speak for IONOS, as IONOS is positioned as a next generation AI company. We are here to deploy the AI tools and humanize the AI tools and focus more on customer experience, focus more on customers' business growth, and also look at, a better cybersecurity.
CP, always good to have you on the show. CP Gurnani, co-founder at AI on OS and former CEO at Tech Mahindra. Before we go, here's a look at some of our guests next week. We assess the market impact of Thailand's election result with MBMG Group. The Council on Foreign Relations takes us through the geopolitical implications of Japan's lower house vote as well. This is Bloomberg.